Hi, hello, namaste, hearty, welcome to yet another interesting iLead tax talks. Thank you very much for tuning in to watch today's tax tip. Such a joy to see you all once again. So today, I'm going to share a strategy that most small business owners don't even know it exists. So when I talk to them, they ask me, Nanda, what is Augusta rule? I never heard about it. Then I tell them that it is something that allows you to pay yourself instead of paying hotels, and this is legal. It makes it tax free, and it is from the IRS. Okay, so that's what we are going to study about Augusta rule, tax free rental strategy today. So you transform your personal residence into powerful tax saving tool with the IRS approved strategy that allows business owners to legally redirect income from their business to themselves tax free. Now, what is this Augusta rule? You might be wondering, where did this rule even come from? It actually got its name from Augusta, Georgia, where homeowners rent out their homes during the Masters Golf Tournament. The IRS allows you to do something similar with your own home. You can rent it to your business, for up to 14 days a year. And here is the kicker: the money you receive is tax free, and two, your business gets a deduction. Isn't it wonderful? Yeah. So let's learn more about this. Now, there is a double benefit here. This is what I call the win-win strategy. On one side, you get money from your business that you don't have to report on your tax return. True. On the other side, your business reduces its taxable income by deducting the rent. So that's like shifting dollars from your left pocket to your right pocket, but with the IRS approval and consent in it. Okay, so don't think that it is something illegal or something that people have cooked up. So the IRS code section 280A provides the legal framework for this strategy, and this specifically allows homeowners to exclude rental income from their personal residence when rented for 14 days or fewer per year. This rule applies to any residential property that serves as your primary residence, including single family homes, the condominiums, townhomes, and even certain vacation properties that qualify as a residential property. Now, as I told you, the key benefits are you can rent your personal residence for up to 14 days per year, 100% tax-free rental income on your personal tax return. You don't pay any tax on that. You need not report that. Next, the business receives a legitimate tax deduction for the rental expense. So, and next, no depreciation recapture issues like the traditional, rental properties. And then complete control over your meeting environment and schedule, because you're not holding it, you're not conducting the business meetings outside, but within your home. So here is how it simply works. 5 things you got to remember here. 1, you own your home. Two, your business needs space, maybe a board meeting, training session, or a client dinner, something. And three, instead of booking a Marriott, your business rents your home. Four, you pay yourself rent. And five, you exclude that income from taxes. That's it, a simple legal tax saving hack. You can definitely write to me for more information, or we can get on a Zoom call also. So no taxable income, business deduction, and then it's a IRS approved strategy. Now let's see this with a proper framework. The five things that I told you. One, you own your home, your business needs to be identified, you must have a rental agreement, we can draft it for you, and then the payment execution, you need to do a proper account transfer. It should not be kind of cash or something, and we will help you reap those tax benefits too. Now let's take a look at this example here. Now the fair market value of a rental property, of your property, let us say it is $300 per day, and as I said, the maximum days is like 14 days or fewer. So total rental income is 300 into 14, so it's like 4200. So you get business deduction, so this reduces your business taxable income by 4200. And on your personal rental income, $4,200 is completely tax free. So if you are somebody falling into 35% combined tax rate, including your federal and state, you have saved a whopping $1,470. And in case your fair market rental rate is more than $300, you will also be reaping the benefits accordingly. So don't miss out on this opportunity. And there are certain documentation that needs to be done. A proper board resolution must be filed. Depending on the type of business entity, are you a S Corp, are you a C Corp, are you a partnership firm, are you a LLC, single member or multiple member, then the payment records has to be there. Have you made it through credit card? Have you done a ACH transfer? Have you issued a check? And the fair rental rate evidence also must be documented. And then you must have a log calendar just to ensure that these are the days that you conducted the business meetings, and things like that. So the specified dates, description of business activities, attendees, meeting, the duration of each business use, and things like that. Now certain cautions that you will have to remember here is that it's only 14 days a year. Only 14 days a year. And that's not repetitive. That's one. And two is, it's only for your primary residence, not for your investment property. Primary residence means the place where you reside. The third thing is, the rates must be reasonable. So just because it is your home, you cannot be quoting some 5-star or 7-star hotel ratings there. And fourth one is, always keep good records. So if you follow these four, you are clear. Okay, for any further questions, please write to me, ask Nanda at iLeadTax.com, or contact our office. We will be more than happy to help you. Now, why it matters? Why does it matter? See, just think about it. Instead of giving money to hotels or banquet halls, why not pay yourself? You are building personal wealth, keeping the deduction in your business, and doing it all legally with the IRS code backing you up. This works, very ideally, for LLCs, S Corps, partnerships, and C Corps. So don't miss out on this. Leverage, the every possible benefit, that is being provided by the IRS. So instead of paying hotels, why not pay yourself? Why not pay yourself? So here's my question for you. Why let Marriott take that money when you could pay yourself instead? That's the power of Augusta rule. So if you would like to explore this strategy and many more, book your iPlan tax consultation with me today. You have the Zoom call link here. My Calendly link is here. Check my calendar and schedule a call with me, or email me at asknanda@ileadtax.com, or call or WhatsApp our office on +1 234 hi iLead. That is +1 234 444 5323. And of course, if you found this helpful, hit like, share, and subscribe so you never miss another money saving strategy. Let's talk. let's get in touch. And we are in the last quarter of the year, so don't miss out, on planning your taxes. And remember, as I always say, filing your taxes is not the same as planning your taxes. Planning is beyond that. Any relationship prospers only when we talk. And today we are living in an era where accountants, lawyers, doctors, your fitness coaches, and spiritual guru, business leaders, these are the people that you must be talking more. You may not see immediate benefits, but if you do what they are asking you to do, I'm sure over a period of time you will reap a harvest of wealth. So stay connected, keep talking to me, and I'll await your email. I'll talk to you soon. Take care. Bye bye.